Hi, Karen Deis here, and I want to review some of the mortgage rules and compliance updates from March 2017. First of all, there has been a lot of talk about buying leads, and it's been reported that some companies are being audited for that very issue. So recently there was a blurb by a audit firm that helps mortgage companies through audits called Garrett and McCauley, and this is what they said. Do you buy leads? We have a bank client actually going through an exam, and the examiners are saying that anyone purchasing leads from Zillow is actually paying for referrals, which is a RESPA Section 8 violation. The reason is that Zillow takes information from a customer, then directs the lead to one mortgage company, and therefore it is quote-unquote considered an endorsement, which means, according to the examiners, that it's a referral. So there's more to come on that. I'm sure that there's going to be a lot of discussion. But Tammy Butler, our editor, has written an article called The Top 10 Things You Need to Know When Purchasing Leads, especially when it comes to the fair lending portion of it. So one of the 10 things that Tammy had mentioned is that if you pay for a realtor's advertising and you share the expense has to be in equal proportion. So for example, if there's an ad and it's and 50% of the space is yours, 50% is for the real estate agent, you pay 50%. If it's you and only 10% of the space, regardless if it's on a website, printed ad, social media, whatever it might be, you only pay 10% and the realtor pays 90% of it. So watch out for that. Make sure that you're complying. So for all of you Freddie geeks out there, they have changed the income and asset qualifying, most of it for the better. So here's the thing, it goes into effect for loans closed on or after July 6th with the word close date, not the origination, but the word close date being the key word here, which means that if you have a Freddie loan in process and it'll close on July 7th, that your borrowers will qualify using the new guidelines, which I mentioned. You may want to delay some of those closings because there's some good changes with that. So a couple of honorable mentions in regards to tax returns. If a self-employed borrower has been employed 5 years or more, only 1 year worth of tax returns is required. And then less than 5 years, 2 years tax returns, both business and personal, no exceptions at all. On the asset side of things, Freddie now says that you can allow money from wedding gifts. So there's a outline of exactly how to verify that. Realtors can now use their commissions when they're buying their own homes and investment properties for a down payment. And then money in business accounts under certain circumstances can be used for down payment and closing costs. Next, if you are a USDA aficionado or you want to get into USDA lending, they have posted 28 new video classes that you can download, print the PowerPoint notes, and it also has some speaker notes. Out of the 28 articles, the longest one is 27 minutes, the shortest one is 9 minutes. So you could go through that within several hours and know a lot more information, even the nuances for USDA. So what's new with Fannie now? For borrowers approved using the one-day certainty, a 4506T does not have to be signed if the one-day certainty has verified all the income, with the key word being all of the income. And effective right now, lenders can use 75% of either the market rent on the appraisal or the lease agreement. The key word that changed here is the word or, and I'm assuming that it's probably going to be the lesser of the two. So I don't know what I don't know what the interpretation is there. Next, Fannie's darling child is the Home Ready program, and every month it gets easier for borrowers to qualify. In this latest article, we've highlighted the 11 of the Home Ready benefits, from using mattress money to 100% gifts to non-borrower income as a compensating factor to push that to a 50% ratio on the back end, so check it out. And then one last honorable mention. Tammy has also written an article about how profit margins are figured by secondary market. So even if you're not a subscriber, this is a free article this month. Just go to the website. Across the toolbar, it says free articles. Check it out there. So thank you so much for viewing. And remember that getting a loan approved and closed these days is rocket science.